I hate to break it to you, but you've been lied to and you've been scammed. Nothing is worse than being lied to and being scammed when you're dealing with the stock market. Especially if you're a beginner investor who's trying to learn and not get too confused because the stock market is confusing. That's why today I will look at 5 different scams and lies when it comes to dealing with the stock market that I've personally noticed myself. The absolute worst scam, and this is also number one, the absolute worst scam that I've noticed is all these stock market gurus that you see all over the place. Every time I'm on the internet and I might be on YouTube watching some videos on investing or doing some research on investing, there's always an ad that pops up about some type of guru who's trying to sell me his course or his system that allowed him to become rich and build wealth. And this is always either Forex or day trading or both. If you really want to start investing and you don't want to put too much money into it, you can always start with a paper trading account. Now, with a paper trading account, you do get access to the stock market without having to put in your own money. So, let's say you open up a paper trading account with TD Ameritrade. That paper trading account might have, let's say, $100,000 in it for you to invest. And this is all fake money, of course. Do I recommend paper trading? I've never done it. I just jumped in with my own money. But definitely paper trading is something that you should think about and that you should look into. However, paper trading does take the emotions out of things. Whenever you're investing your own money, that's when you're gonna see how emotionally confident you really are when it comes to investing, because you're gonna see your investment money go up and you're gonna see your investment also go down. And that's really gonna tell you how risky you are, but also how well you deal with yourself when it comes to money emotionally, money that's invested in the stock market, of course. Now back to these stock market gurus. The reason why I brought up paper trading is because when you are paper trading, you do get experience. Even if it's not your real money, you do get to experiment with different investing styles, like I said, and you will get a feel for investing. Now, when you listen to one of those stock market gurus, you will be able to see which ones are lying and which ones are actually giving you sound advice because of your experience that you had paper trading. So the number 2 scam that you need to watch out for when you're investing in the stock market is the good old pump and dump. Now, what's a pump and dump? Usually pump and dumps happen when you're trading over the counter or when you're buying penny stocks. So the pump and dump works like this. There might be a company that's trading on the OTC market, the over-the-counter market. And the companies trading on the OTC market, those companies are not regulated. So they don't need to document their financial metrics with the SEC. A investor comes in and that investor's like, okay, I want to make some money real fast. I want to make some money real quick. So I'm going to buy shares of stock in this shady company. And these shares, usually penny stocks, are cheap or they look cheap. They might be trading anywhere from a penny or less to a buck, to a dollar, or even more. This investor looks at the price of the stock, which it's being so low. They're like, okay, I can make a quick buck out of this. So what does he or she do? That person purchases, or even company purchases, a boatload of shares in that stock, and then they advertise that specific stock. So the price is low, they start advertising it, bringing in new investors, different investors to invest in that company. The price goes up tremendously, 100, 200, maybe even 1,000 times higher than it was trading at. At that point, that shady investor is like, okay, now's the best time to cash in on my profits. So that investor's at its highest point sells all its shares, pushing the price of the stock down. The stock was never a good stock anyway. And pretty much the investors that invested in that company thinking that it was a great company, they are left holding the bag, a bag that is worth pretty much nothing. So let's switch from scams to lies you've been told about investing in the stock market. Number 3, you need to be an expert when it comes to stock market investing. Now, granted, you do need to know some basic fundamental stuff when it comes to investing, but you definitely don't need to be Mr. Warren Buffett himself if you want to invest. Even better is if you invest at a young age, you're gonna make mistakes. And it's good to make mistakes because you're experimenting, you're having fun, you're making mistakes, but you come back from your mistakes, you learn from your mistakes, and you become a better investor. If you want to become a better investor, you're just gonna have to jump in the market, make mistakes, learn from your mistakes. There's no other way around it. You cannot just read books and think that you're a good investor. You cannot look at other people when they're investing and think that you're gonna be that good of an investor just by looking at other people. No, you're gonna have to jump in the market, make mistakes, start with a small budget, or even if you don't want to lose money, start paper trading. But once you have your confidence build up by just jumping in the market, investing, making mistakes, learning from your mistakes, trying out different techniques, you will come up with a method or a system that works for you. Some people like day trading. Others might like trading in commodities or forex trading. I myself, I'm really into value investing, especially dividend investing. But the only way that you know what works for you is to jump in and to just start trading. You don't need to be an expert. You're going to learn along the way. You're going to make mistakes, but you're going to learn from your mistakes. So let's talk about number 4, line number 4. You need to have a ton of money in order to invest in the stock market. That's not true at all. You can start with as little as $1, $1. Now, is that going to make you rich? Most likely, no. But that just goes to show how easy it is nowadays to invest in the stock market. Now, it wasn't always like that. Back in the day, you also had to think about your commission fees, which nowadays you don't even have to pay a commission fee if you use a brokerage account like Robinhood. Back when I started investing, I had to pay $6.95 with Scottrade every time I tried to buy or sell shares. And then when I opened up my Ally account, my commission fee was $4.99. Nowadays, you don't even pay a commission fee. And when I did my research and I went back to the 60s and 70s, I noticed that the commission fee for buying and selling shares was $65, so even higher. But with the advent of the internet, things have come down. The cost has come down of trading. So no, you don't need to have a ton of money to start investing. Plus, I'm even gonna say you don't want to start investing with a ton of money. You want to start investing with a small amount of money. Because it's a mental thing. If you start out investing, let's say you inherited $1 million and you've never invested before. So you have $1 million to invest. You're gonna be way too nervous. You're like, okay, I have $1 million. What do I invest in? I don't want to lose any money. But if you start small, let's say you start with $50, $100, you can play around with the money within the stock market. You're gonna make a couple of mistakes, but you learn from those mistakes and you see, okay, this is actually fun. I'm making money. I see what I gravitate towards. Maybe Bitcoin is something that I like, maybe not. Maybe I just want to invest in stocks. Starting small will give you that experience and that confidence that you need, because then you're able to grow the income that you're making or grow your wealth in investments and add more to it with confidence. Now let's look at lie number 5. Don't invest in the stock market because the stock market is too risky. Now with this lie, the stock market is risky if you don't know what you're doing. Yes, you can lose a lot of money if you don't know what you're doing, if you're following somebody's advice that you don't need to be following. But think about it like this. The stock market has created wealth for many investors. Of course, the biggest ones that we know of are going to be your Warren Buffetts and your Charlie Mungers. But there's everyday people like you and myself who've been able to create wealth in the stock market. And keep in mind that risk is involved in anything that you do. If you're investing in the stock market and you're older, you're almost close to retirement, I definitely do not recommend putting all your money in stocks. You need to look at your asset allocation and have a larger percentage of your investments in safe investments such as cash, bonds, money market funds, and the list goes on. Annuities even. If you think about things being risky, think about it like this. The stock market, if you're invested in the stock market, you can keep up with inflation and your money can grow faster than inflation. So inflation meaning every year the price of goods and services goes up by 3 to 4%. Think about risk like this. If you had a $10,000 and you're like, the stock market is too risky, I'm not gonna invest it, I'm probably gonna lose my money. Okay. You take that money and you put it in a savings account. How much are you gonna make from a savings account? Maybe 1% per year? But keep in mind that inflation is 3 to 4%, so your money is losing value. Even if you take your money and you place it under your mattress, you're like, okay, I don't trust banks, I'm gonna place it under my mattress. Well, somebody might break in and steal your money. Or your house might catch fire. Or even if you have a pet, your pet might start chewing on your money. So is it really safe in your house? Like me personally, I would rather put my money in the bank, but I do know that there are a lot of people that don't trust banks. So let me know what you thought about these scams and these lies that you've been told about investing in the stock market. Always pay attention to what you're doing. Pay attention to who you're listening to. Never follow a stock market guru until you've done some research. And nowadays it's really easy to do research. Just Google their name, Google their product, see what type of reviews there are on their product, but definitely make sure you double check the reviews also because people have been faking their reviews.